Welcome back everyone to another episode on our stock review. Today we will be looking at Intuitive Surgical. The ticker name is called the ISRG. So this one I've been looking for quite a while now. So without further ado, let's get right into it. Over here we have ISRG is a surgical or medical field, but with a mixture of robotics elements inside. So this company is actually, I have been eyeing on this for quite some time. It's just that I don't have the guts to go into the investment of this company due to the fact that it's actually overvalued. It's sitting at all-time high, and especially it's actually far away and above my fair value, and I wouldn't actually purchase it. So based on this uptrend, I could actually add on by using this support over here around the $430 range. And recently just searched up due to the earnings results, have high bookings and so on. And based on the structures, we can actually see a breaking of the flag, and also signifying that there's a potential to go even higher. And also I'm expecting to see the price reacting to this gap to fill it before going further up into a higher price or all-time highs and so on. So without further ado, let's get right into their financial fundamentals. So over here we have the revenue for Intuitive Surgical. So you can actually observe this is a very high in terms of their predictability, in terms of high revenue, and in a steady, consistently increasing form. As for their net income for ISRG, we can also observe a similar pattern as the revenue, is signifying that the company actually being able to profit from what they are doing and also be able to generate more cash in the long run, as for the observation made from their historical net income. So what is ISRG? Is actually a global technology company that pioneers and leads the field of robotic assisted minimally invasive surgery. So this allows surgeons to operate through a few small incisions using a console that provides high definitions, 3D viewings, and they control robotics arms that hold and maneuver tiny instruments with greater precisions, and also to do surgical and so on. So have their right range of procedures. They have urology, general surgical, and cardiac surgeries. So basically their stream of income is going to be their system of products, meaning that they have high value sales of the Da Vinci and Ion surgical system to the hospital or centers, instruments and accessories. So company's largest and most consistent source of revenue, due to the fact that for every procedure performed, hospital must use proprietary single-use instruments, which can cause what we so-called, and here got mentioned also, which is recurring and high margin revenue streams that grows as the numbers of procedures increase. Lastly is going to be services, include revenue from service contracts, maintenance, repair of the surgeon training, as well as provide technical supports for the complex systems and maintenance services. Lastly, we'll be going through the strength and weaknesses. So for the strength is going to be market dominance, whereby they has near monopoly in robotic assisted surgery market, with dominant market shares ranging about 70 to 85%. Strong economic mode, robust recurring revenue, as we mentioned about the one-time using of instruments, which needs to be and must be used in order to maintain and ensure the safety as well as bacteria free. Strong brand reputations, technological leadership, especially heavily in R&D, as well as robotics, strong financials. And as for the weaknesses, it's going to be high system costs, multi-million-dollar price tag for their systems, and can be a big problem for smaller hospitals, high maintenance costs, and high product concentration. Very large of proportions is actually tied to the Da Vinci ecosystem, and one of the strength is only due to the fact that they have recurring revenue from the one-time instruments needed by the hospital to keep on changing, keep on buying for to meet the demand of any surgical operations. And lastly is going to be high valuation, because of the stock is actually being overvalued at the moment of the time as we speak, and also sitting at all-time high and maybe looking forward to break through it. So after looking at what they actually do, is that from the view of ISRG, is more towards a view of being in a robotic field that provides their Da Vinci ecosystems and to major as well as to helps in terms of small surgicals to provide higher precisions and so on, and they will be able to have these strengths in terms of dominance, monopolies, and one of the head or the major company in this sector. So over here we can observe their profit margin is also constantly increasing up until almost 30% right now. And inside balance sheets, we're looking at the total current assets as 8,500, and we also have their total current liability at 1,800, which is more than 2 times of their total current liabilities, signifying the situation is quite safe if debts are needed to be settled immediately. And as for their net cash, which is total debt or cash, is actually in a positive view, meaning that the company has high or more cash than their debts. And as for the ratios, we have the debt to equity ratios actually sitting below 0.5, which is a very healthy situation. And we also have the PB ratios. So this PB ratio is actually higher than the median of the value historically, so signifying that the stock price is actually quite overvalued, and especially with the PE ratio of 71 as well as forward PB of 58, which is also signifying that the company is actually overvalued. So for their ROE is also in a steadily consistently increasing form, staying above 15%, as well as ROIC increasing form, although it does miss the value and staying below 15%, but 10% is actually quite a reasonable value and acceptable. So lastly is going to be the ISRG economic mode score. Over here we actually obtain a very good results, which is a white mode rating by Morningstars, by Guru Focus, as well as Seeking Alpha, and also the rating itself by the AI, which scored a 9 out of 10, signifying a white mode for ISRG. So overall, this company is in a situation whereby I would definitely highlight it as a high quality company due to the fact that it has very high in terms of their revenue, net income, more cash than their debts, high ROE, ROIC, and especially in the forms of having that strength in recurring revenue for their one-time use instruments. However, some concern arises due to the fact that the valuation of this company is very high and also it's overpriced and overvalued. So I wouldn't actually want to just step right into the investment due to the fact that I have lower safety margin. So if I were to invest, I would likely to wait for the market or the ISRG company to have a discounted situation before I entered, so that I have that higher safety margin as well as more profit range in the long run. So I guess that is all for today's video, and I hope this helps. And if you are interested in this intuitive surgical, you can do your own research before making any money decisions on the investment itself. So I guess that is all for today's video. It's a very high quality company with high modes and great financial status fundamentals. So I guess that is all for today's review, and I will see you guys on the next video. Goodbye.